What's up, guys? Here are my top 5 requirements for entering any and every trade, and I'll list them in order. So, number one, have a strategy. What a strategy does is enables you to identify if a trade is valid or not. Now, for you to proceed to the next steps, you need a valid trade. Now, at GA Trading Club, we have about 5 or 6 strategies that we teach that enable us to see is the trade valid based off of these strategies. Now, if it's not, we let it go. Remember, a lot of traders deal with FOMO and 4G. FOMO is fear of missing out, and 4G is fear of jumping in. Now, for this ones, you deal with this because you ideally do not have a lot of strategies or valid strategies, or you're not yet there psychologically as a trader. Now, having a strategy, that's the first thing, enables you to find valid trades and weed out the trades that are not valid. Number two, have a predetermined risk for each trade. Now, at GA Trading Club, our starting trades are about 0.5% risk of every trade. Now, as a rule of thumb, you do not want to risk anything more than 1% of your account per trade. So have a strategy that identifies valid and invalid trades. Number two, have a predetermined risk for each trade. Number three, know what is your risk to reward. Now, what do I mean by risk to reward? I mean, how much are you risking and how much are you gaining based on that risk? Now, for us, the basic risk to reward we use is a 1:1. That means if we lose one trade, we only need one more trade to recover the losing trade. What you don't want to have is a negative risk to reward. For example, risking 2% to make 1%, because if you lose with that risk to reward, you would need, if you lose one trade, you would need 2 consecutive winning trades to get back the one. So at the very least, you want to have a 1:1 risk to reward, and you can build from there. You can have a 1:1.5, 1:2, 1:3. So that's number three, having a predetermined risk to reward ratio. Now, number four, have a predetermined set TP and stop TP and stop loss. So TP is take profit. So take profit is the value at which, if the trade goes in your direction, that is where you're exiting. So you automatically exit when the trade hits that value. The stop loss, on the other hand, is if a trade goes against you and that triggers, you're automatically kicked off of the trade. So remember, most of the times, the risk to reward ratio is what's going to determine your TP and take profit and stop loss. So for example, let's say from the point of entry, and you have a 1:1 risk to reward ratio, and let's say you're using 100 points as your take profit, ideally your stop loss would also be negative 100 points. So that is how they correlate. The last one, number five, find a point of entry. So you can either enter on market entry, where ideally you just click the buy or sell button, or you can set pending orders, where if price comes to those areas, your order can automatically get filled into the market and you're in the trade. So those 5 things. Number one, remember, have a strategy. Have a strategy. I cannot stress this enough. The strategy helps you identify the validity of a trade. Number two, have a predetermined risk for each trade. Remember, rule of thumb, risk no more than 1% for each trade. Number three, have a predetermined risk to reward ratio. And again, you want a risk to reward ratio of at least 1:1. Number four, have a defined take profit and stop loss, so that when either of these are reached, then they can either take you into the trade or out of the trade. And the last one is you find a point of entry. And once you do this, you just go ahead and enter. So long as the trade was valid, remember, nobody, even the big banks and hedge funds, do not have a high 100% win rate in anything. So remember, even though a trade is valid, you can still lose a trade. But the key thing is to find valid trades, and whether you win or you lose them, it doesn't matter. So long as a trade was valid, that's the only thing that matters. And then if you lose a trade, make sure you know why you lost it. Did you over leverage? Was your take profit too close or too far? Was your stop loss too close? How was your risk to reward? And once you do this, journal each and every trade, what worked for you, and what didn't. But until next time, I'll see you. Bye.